Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. I hope you had a good day today. So SPY broke the lows of yesterday and we started today with a pretty notable dump, and oil had a lot to do with that in my opinion. We'll look at why once we get to oil through our rundown here, but oversold bounce, and that bounce lasted for pretty much the entire rest of the day. So in the end, it's a bear break on the daily with no follow through, and as we know, those bear breaks with no follow through keep the potential of a bull flag on the daily alive. I'm a bit cautious in the market right now. The reason is the tech sector day after day, just like yesterday, it's the same story as today. The tech sector put the market bulls on their back and is carrying this market forward. And the question is, how long can they keep that up? As I mentioned in yesterday's video, the most important thing for me is what happens when QQQ consolidates. Because right now, the tech sector has a higher low every single day for 7 days. We have not started any daily consolidation. And we're seeing daily consolidation in the S&P 500, in the healthcare sector, in the financial sector. We have financial sector earnings coming next week. We have to be paying attention to that, of course. But again, I want to know, are we going to see healthcare and financials bounce when the tech sector consolidates? Because if we don't, if those names continue to consolidate when the tech sector consolidates, the S&P 500 is going to negate its daily bull flag and pull back significantly enough that we will then be looking for an equilibrium to be the most likely scenario. If XLV and XLF bounce while the tech sector consolidates, then the S&P 500 bulls are just fine, and that's what they want to see. They want to see that rotation. They want to see money leaving tech, healthy daily consolidation, and having that money go into other sectors. So worst case scenario, in my opinion, for the S&P 500 short term would be for the tech sector to consolidate, even if it's just healthy, 2 days of consolidation, but financial sector having a bearish reaction to earnings, dropping through its support, which is just barely hanging on. We broke it by 3 pennies today. And if the financial sector continues its weakness and the tech sector is consolidating and we're not seeing money do that rotation game, that's when the S&P 500 is going to pull back more significantly. So very curious to see. Again, first things first, we have to see QQQ break the pattern of a higher low every single day. Then we can say daily consolidation is underway. But until that happens, there's no daily consolidation. We just closed at the highest level yet again and hit a new all-time high on QQQ. And today it was pretty much Amazon that was leading for the most part. So that's a general overview. As far as the S&P 500 goes, let's look at the futures chart because we got a potential hourly equilibrium to be watching into tonight. Big dump today, big bounce. We're watching for an hourly lower high to be set on this bounce, and then we'll look for a pullback and an hourly higher low. Why are we looking for an hourly higher low as the most likely scenario, as opposed to a drop to lower lows? Again, I'm not saying we can't drop to lower lows. I'm talking probabilities. Which is more likely? Either is possible, but I want to know what's probable. And the reason is the amount retracement. So 31.80, we dropped down to 31.15. That's a $65 drop. And how significant was the bounce? 15, we'll call it 65 to round and make math easy. So that is a $50 bounce on a $65 drop. Percentage-wise, much more significant than 50%. And as we know, if it's going to be a likely bear flag, we want to see a bounce of pretty much 35% or less. So we'll be watching for a potential hourly tightening range into tonight. But bigger picture, these bear breaks, let's go to the daily. Bear breaks just not getting much follow through at the moment. Very curious to see what happens when the tech sector consolidates. IWM, 136.29, key support is approaching. We held that level by about $1 today, and we're watching the 2-day time frame. So again, we have to see pretty much, we may see the financial sector earnings reaction determine how we break from here, because again, those financials are more important for IWM than they are for the S&P 500. If it's a bullish reaction to earnings, then we will likely at least remain in this pattern and maybe even break it bullish. If it's a bearish reaction to earnings, then we will likely break this pattern bearish. So in the short term, heading into tomorrow, bulls want to change that hourly trend back in their favor to try and set the higher low compared to 136.29. So QQQ, as we know, all bulls, extremely strong. Look at the dump. We dumped today this morning and a V-shaped recovery. Not even a significant recovery and then tightening range, just straight back to an all-time high. Bulls continue to buy the dip significantly every time there is a dip. So we'll now say anything above the low of today is an hourly higher low. And again, the most important thing for me every day from here on out, the next few days, is can the bulls hold the low of yesterday? And it's the same thing as yesterday. So what did we say yesterday? SPY broke the low of Monday. Nope, SPY broke the low of Tuesday and failed to get follow through because QQQ did not break its low of Tuesday. Same thing today. SPY broke its low of yesterday and we did not fall apart because QQQ did not break its low of yesterday. We held that support level by a pretty significant amount. We held it by over $1. So it wasn't even really at risk at any point today of breaking. XLV. 3 days of notable consolidation. It is now no longer likely to be a bull flag because of the size of the pullback. And again, I can look at the retracement levels and do the math to see what percentage have we pulled back, but it's getting roughly close towards that 50% mark at the low of today. And again, the question is going to be, when we see the tech sector pull back, will that be the financial, or I should say the healthcare sector setting its daily higher low and starting to bounce? Or is it going to keep pulling back with the tech sector weakness? It's going to be very important for me as to which of those two scenarios it is. Financial sector was the lead bear today. We've been saying that for months at this point, being the lead bear. And we broke 22.52 support. No follow through at this point, only a 3-cent bear break, but it is continuing the daily downtrend. And so far we've been watching our high, low, lower high, lower low, lower high, lower low, and we're going to see if we get any bear follow through. And it certainly looks like people do not want to be bullish the financial sector heading into their earnings. And looking at the monthly time frame, our monthly lower high is looking like it is set. High, low, lower high, and we'll watch for a higher low compared to the COVID dump low. And if it's a bearish reaction to these earnings, then it's certainly going to be a very convincing monthly lower high being set. So let's talk best case and worst case, just to make it as clear as possible. Best case for bulls, QQQ healthy daily consolidation for 2 or 3 days into a daily bull flag. And during that period, XLF and XLV bounce, and XLF bulls have a bullish reaction to earnings. Best case scenario. Worst case scenario, QQQ pulls back more significantly than would allow for a daily bull flag. During that period in time, XLF drops convincingly below 22.52 and continues its very clear daily downtrend. And XLV fades back down to the $96, $95 support zone. That's worst case scenario. And again, one thing you won't see me do is predicting which of those two scenarios it's going to be. I have absolutely no idea, but I know how to make money in both of those scenarios, just taking it one day at a time. Biotech sector, new all-time high today. We did break the low of yesterday as well. No bear follow through, but certainly a ton of volatility. So started strong, all-out dump, pretty decent bounce, and we would have to see an hourly lower high and then drop and break the low of today to confirm an hourly downtrend and confirm daily consolidation. But at this point, we know anything above 108.43 keeps the bulls in complete control, and that's pretty much 7% of space that the bulls have to work with to maintain the daily uptrend. Semiconductors, all-time highs. Bulls in complete control. It was a very brief pullback, little mini bull flag, and it's being confirmed. And that's on the back of NVDA, our lead bull. NVDA is correlating to the tech sector, in my opinion. You look at these days, and we've got 7 days in a row with a higher low every day, and you look at QQQ, it's the same chart pretty much. So I've been noticing more NVDA and Tesla correlating to QQQ more the last 2 weeks than I've noticed recently, in the past 2 months, let's say. So that's been standing out to me, but SMH certainly benefiting from that NVDA bull strength. And checking in on some other names, there's AMD today. So AMD, little quick daily bull flag, and then an explosion. Huge day for AMD, and just $59 and $59.27. Very important resistances approaching. And MU, not doing much, but not dropping. So SMH bulls in complete control. We have a short-term support level at 155.32. And again, this is the kind of scenario where I can use my discretion as a technical analyst, where if we break that level, I wouldn't call it a loss of the daily uptrend. If I want to be very protective of profits, if I were in a bullish position, I can use that level as a stop, but I would not say the daily uptrend has been lost if that level breaks. It was just such a very brief pullback. This is a very clear support level. Multiple days of pullback, clear pivot into continuation. That's a rock solid support level that is very important to the daily uptrend. This little brief stutter step, not the case for me. TLT. So big day for TLT, and it was a notable day for the 10-year bonds. And very admittedly, bonds are not my thing. I'm not saying they're not important, because there is tons of capital, global capital, involved in the bonds market. And you can get information from a macroeconomic perspective from following bonds. But what I will say is that in my experience, I have never placed a trade out of thousands and thousands of trades, never placed a trade in my entire life that had any influence on whatever the bonds are doing. So that leads me to say bonds have zero impact on my trading and my trading style. So honestly, I don't care what bonds are doing. And maybe someday if I struggle with trading, I'll dive into the bonds market and try and find some clues that I'm missing out on. But that's not the case right now. So honestly, I don't care what bonds are doing. That doesn't mean that they're not important. It just means for what I do in my trading style, it has zero impact and zero influence. So I highly suggest checking in and reading, what happened with the 10-year Treasury yield, as it has a new low after the best 30-year bond auction since 2014. So it was a notable day in the bond market. I just don't care. Gold. Nope, the VIX. So the VIX was volatile today. You could say we changed the daily trend. So we hit our low, we bounced, topped out, higher low by holding support, and we did break to a higher high. A little bit of weakness into the end of the day. So pretty much what that was the volatility index, significant bull move responding to the weakness first thing this morning, and then giving it back on the bounce. So a little bit choppy on the daily time frame. Bulls would love to maintain the hourly uptrend from here, setting a higher low, trying to break to a higher high. But in my opinion, if we're going to break 3150 from here, we have to see the tech sector lose the pattern of a higher low every single day and start its daily consolidation. May get an hourly equilibrium into tomorrow to be watching. All depends on where we open, of course, but not the convincing strong close. And if you look at the closes that we've seen on the VIX here, when's the last time we've closed at the high of the day with momentum and gotten follow through? And the answer, it's been a month. Even when we close strong, no follow through, no follow through, no follow through, and all the other closes are not strong. So we're very rarely at the moment seeing momentum where we close strong and get follow through, which is telling us that the S&P 500 is not closing weak and opening lower, essentially. So keep an eye on momentum. Momentum definitely matters to me as far as how we close in scenarios. It's very notable for me when the S&P 500 closes at the low of the day. So gold consolidating today, and we did pull back with the broader market. There was absolutely correlation with this dump here on gold and the dump in the S&P 500. So again, if I am a gold bull, I don't want to see that. I want to see it act as a hedge. I want to see it either disregard what the S&P 500 is doing or act inverse to it. And that's one of the reasons that I have not reestablished a position after selling somewhere in the 17 to 1740 range. I forget exactly where I exited my last GLD position, but I have not reestablished an entry because honestly, as long as we do have that correlation, I don't see the point in a long-term hold of gold. I already have exposure in equities, and I don't want to double down on that exposure. The past few days, as SPY has been consolidating, we've noticed the lack of correlation. It's been a good sign for the gold bulls. We're going up while the S&P 500 is pulling back in a potential bull flag. But today was just sharp fear, sharp, fast fear that we did see a reaction to, and it's something we have to keep an eye on. Because the last thing I want my hedge of gold position to do is to dump during market fear. And silver did the same thing. Bearish reversal candle on the daily for silver, but plenty of space to look for a higher low compared to 1776. Gold inside bar today. If it breaks bearish, we look for a daily higher low with plenty of space for that higher low to form. Miners, Pull back today, but again, a significant bounce, similar to the S&P 500. We would have to fail to break 39.44 and drop down and break the low of today, 37.82, to confirm an hourly downtrend and see further daily consolidation take place. Technically, it's already taking place. We broke the low of yesterday, and that broke the pattern of a higher low every day for 7 days. So we're in daily consolidation right now, and tons of space for that higher low to form. And we'll be watching, all these names. We're watching first hourly oversold conditions after such significant bull runs, and that's the case for our tech sector as well. Checking in on Amazon, the lead bull today, it's just been on absolute fire. We've gone up $500, $550 in 7 days, and we closed at the high. Microsoft started strong today. Tried to get back to where we were, but again, all-time highs. Apple all-time highs. Netflix all-time highs. You get the idea. Facebook did not get an all-time high, but it's close. Who else? Google. Google's on the verge, and we did... Nope. Double top at the all-time high at the moment. Bottom line is, tech is strong. But I'm cautious tech. Oil. So let's look at how oil impacted the market today. So finally losing the 4-hour uptrend. We had the head and shoulders pattern that we were watching that did not confirm. We double topped at 41.08, and then we just all out dumped. And look at how many support levels we took out. We had 1, 2, 3, 4, and 4 higher lows all being taken out on high bear volume. And the way I'm viewing this on the daily time frame is high, low, lower high set at 41.08, and now we're watching can the bulls form a higher low compared to 37.08. Still have a good amount of space. We've got 6% before that support level is in play, but that is the most important daily level at this point. Look at the correlation. So this is interesting, and oil gave a little bit of a clue first thing this morning where we dumped and then putted around. So look at where this dump happened. We'll call it 9 to 9:15 we dumped. And then it wasn't a very significant dump. We got 5-minute oversold, but at that point in time, we weren't 15-minute oversold. We were still holding 4-hour support. And then the bell rang, and we traded around in the morning. And look at how the S&P 500 correlated to oil. It's very interesting. It tells me, the way that I interpret this, is that the bots that were correlated to oil were not turned on or not active during pre-market, but they were active once the bell rang. Because look at 9 a.m. to 9:15. Yes, there's a little bit of red, but nothing. It's a little blip. Then we have a big 15-minute pullback to start the day from 9:30 to 9:45. So oil at that point in time, 9:30 to 9:45, it did drop to a lower low. It was a 5-minute bear flag, and it dropped to a lower low, so there is a correlation there. Then we bounced a little bit. We bounced for 20 minutes, 25 minutes, and then we dumped on big bear volume. And SPY did the exact same thing. 15 minutes of pullback, a little bit more magnified on SPY than on oil. Bounced for 20, 25 minutes, and then dumped. So, again, disregarding oil pre-market and then reacting to oil once the bell rang shows me those automated trading bots, high-frequency trades, a lot to do with oil on this morning weakness, in my opinion. And curious how the bottom played out here. Hit the low of the day, formed a base 11.15 to 11.25. Oil bottomed first. There were clues in oil today. Oil bottomed at 10.45 and set a higher low at 11 o'clock. SPY tried to... No, that was all the way back here. So oil started bouncing, and SPY still saw some significant downside after that. So almost like SPY was acting as a laggard on the way down, and then a laggard on the way up. I did end up playing this SPY bounce, scaling into weakness, and I'll go over my trade review with Tesla, and I'll talk about that SPY trade in just a minute. So natural gas, tried to see continuation, 4-hour. Again, we never lost the uptrend with this significant consolidation, but lower high was the most likely scenario because of the size of the pullback, and then we confirmed the 4-hour downtrend. So more significant daily consolidation underway. Still looking for a higher low compared to 1562, but the bear's obviously in control of the short term. And we're watching first hourly oversold conditions, which we are in right now. And bulls just want to establish a daily higher low. The sooner the better. So I took the Tesla trade yet again today. Keep doing it until it doesn't work. And one of these days, it's not going to work, but it's worked 3 days in a row now. And what has the trade been? It's been a bearish entry in the morning, playing off of the previous resistance from the day before. So we had the all-time high in extended hours, 1437. So on Monday, we made bearish entries using that level as a stop, went well. Yesterday, bearish entries in the morning using the high of Monday as a stop, went well. Today, bearish entry in the morning using the high of yesterday as a stop, went well. So it's very healthy daily consolidation, but the bears are still making good money on a day-to-day basis using that strategy. One of these days, as long as the market keeps holding up, Tesla's going to break these resistance and will stop out for a loss. But that will pale in comparison to the amount of profit made as a bear using this trade for now. So I entered bearish first thing this morning and was using that level as my stop. And as soon as we dumped down and hit that low of the day, I'm much more comfortable. We bounced and set the 5-minute lower high, dropped to the lower low. And at that point, I was just flipping. So let's just say my position size is 2 shares. It's larger than that, but for ease, 2 shares is my position, and I'm flipping around with that. So I entered 2 shares. If we keep running up, maybe I'll enter 2 more, but that's my maximum that I want to enter. So I enter 2 shares, stop above the high of yesterday, we drop down, I take profit into weakness, because another thing that Tesla has been showing us, and the reason that it is a daily bull flag, is the bear breaks are not getting much follow through. So I have been finding that exiting partial profit into weakness is the strategy over the last few days. So out of my 2 shares, I sell 1 share, watching for a short-term bounce, and then I re-enter it on a 5-minute lower high. So this is a rough example. Let's say I enter, maybe I can see what my orders were. Way more trades on a daily basis these days with this Tesla volatility. So first trade I took on Tesla this morning was a short, and that happened in the upper 1390s. And started covering, so covered one position quickly in the 1380s. Again, a little bit early, but what that does is now puts me in a risk-free position. And I knew I wasn't going to sit in front of the computer and trade all day. So what I wanted to do was enter a bearish position, take partial profit, put my stop above the high of the day at that point, and I'm risk-free. Worst case scenario, I stop out with either break even or a tiny loss. Best case scenario, I come back to the computer in an hour and we're lower, which is what ended up happening. So again, when I was present, the bear breaks are not getting too much follow through. So I sell half, I reload on the 5-minute lower high. I use the previous 5-minute lower high as my stop. We dump down again. And then there was a clue, and I missed this one, and I wasn't at the computer when this happened. So at this point in time, I had covered, and I only had my 1 core position. So 1 share, let's say. And we held the low of the day and bounced. And had I been on the ball and paying attention, I would have covered everything right there, and I would have potentially even gone long and just put my stop under 1350 to have tiny risk to try and go in the other direction. I was a little bit distracted because at that point in time, I was hedging this trade, so to speak. So I'm bearish on Tesla. I've made good money, bearish Tesla today, and SPY is dumping at this point in time. And I am now scaling into SPY bullish as almost like a hedge to offset that Tesla position where I'm confident that that SPY is going to see a short-term bounce because the 5-minute RSI at that point is down in the low teens. We're almost single-digit 5-minute RSI. So I start scaling in, and again, if SPY starts bouncing, I'm going to make profit on my SPY bull position as I lose some profit in my Tesla bear position as Tesla bounces in response to the S&P 500. So I did end up entering a little bit in SPY, scaling in. I think my first fill was, let me remember. Gotta look real quick, bear with me. So SPY filled at 311.93 was my first fill. And that was on this pullback. And then I did exit. Again, I do my partial scale out plan. And I did fill one more position at 311.38 as well. So 2 fills on the way down. And then I sold my first one. I sold half at 11.63. So I made 25 cents on my second position. So that lowers my break even of my first fill 25 cents. So 311.93, my first fill. That break even now drops down to 311.68. And then I ended up scaling out into the 312s. My final sale was 312.10. So not a big win, small win, but offset some of the Tesla bounce. And I stopped out of my bearish position. Every bounce I was just moving down my stop loss. And we bounced here. We set a top at 113, make that 13.68. So then I moved my stop down to 13.68 and change. And I did stop out on this bounce. But again, the profit that I left on the table from the 13.50s to the upper 13.60s, I offset that by some small profit in that test, or I should say in that SPY bounce. Had I not been focused on SPY, and if I was just in the zone on Tesla, I would have liked to think that I would have seen this double bottom as SPY dropped to a lower low. That's a clue. SPY drops to a lower low and Tesla doubles bottoms. That shows me a bullish correlation between Tesla and the S&P 500. So I like to think that I would have exited and entered a small bullish position quickly, but who knows in the heat of the moment. Hard to say what we woulda, coulda, shoulda done. And that's that. So it's been 3 very good days for Tesla. Trying to work my way on a month maker to start the week of July. Again, I talked in the market video sometime in June because I was having a choppy June. And I wasn't necessarily losing a lot. I just couldn't get my flow. And when you're in the flow, you know it. And Monday, trading Tesla during the live stream was the best flow that I've had in the last 2 months. And it's just everything's clicking and trading is easy. It's a breeze. And you're just winning on every trade. And we try and stay in that flow state as long as possible, which is why, again, we call a timeout and break any bearish routine that we find ourselves in to break up that momentum. And I lost my train of thought, so I'm done talking. I did have one loss today on Tesla. Can't just only highlight the winners. So I did enter a bearish position here. So I saw 1383 or 1384 resistance. We pulled back significantly. I was looking for a lower high compared to that level. I entered a bearish position, pretty much 1380, put my stop above 1384, and was looking for an hourly lower high to be set on both SPY and Tesla. So at that point in time, my entry was roughly right around 1 o'clock, maybe a little after 1 o'clock. And at that point in time, SPY had bounced significantly. We were up here, and I was hoping that we were going to set that hourly lower high and consolidate into the end of the day, which would have been good timing for that Tesla bear entry. In the end, we didn't, and we got the bull break, and I stopped out. And then my business partner, Jason, had a meeting right here as I was about to buy at 1381, so he cost me some money. I haven't told him about that yet. And that's that. Have a good rest of your day. Don't forget to do good things out there, and we will see you soon. That's a long video.